the government has announced it's giving the benefit system a serious shake-up to cut costs and get more people into work. My name is Jack Rivers and welcome to this week's episode of Tax Tidbits, where a number of benefits reforms were announced by the Work and Pension Secretary Liz Kendall on Tuesday. From November 2026, it will be tougher to qualify for personal independence payments, though those with more severe long-term conditions won't have to go through endless reassessments anymore. Finally, the Work Capability Assessment is getting the boot in 2028 and will be replaced with just one assessment similar to the PIP system, meaning there will be fewer hoops to jump through. But don't get too comfy, as new claimants will see incapacity benefits slashed in half from 2026. Young people under 22 will miss out on their incapacity benefit top-up to universal credit, with the government promising to spend the money they're saving from this on job support and training instead. On the upside, job seekers will get a bit more cash. Plus, there's a £1 billion plan to help disabled people and those with a long-term health condition to find jobs. So there's a lot to digest from this announcement, but the only thing they are looking to change in the next year or so is legislation so that trying out work won't automatically land you back in reassessment purgatory. Chancellor Rachel Reeves met with industry watchdogs on Monday as part of her mission to cut through the UK's red tape. She told regulators there's too much bureaucracy holding back economic growth and laid out plans to cut costs, speed up processes, and even ditch some oversight bodies altogether. Plans include faster approval for medicines, simpler mortgage rules, and a concierge service to help international businesses navigate the system. Environmental rules are also getting a trim, even bats aren't off the hook. Reeve has already scrapped NHS England and is eyeing other government bodies for the chopping block, in the hopes that less red tape will lead to more jobs and investment. Either way, Reeves is on a mission to declutter the system, Marie Kondo style. HMRC is planning to launch a new reward scheme later this year, offering big rewards to anyone who spills the beans on serious tax dodgers, with payouts rumoured to be up to 25% of what HMRC recovers. Think of it as the ultimate revenge plan for disgruntled employees and nosy neighbours who've had enough of Karen next door bragging about her clever offshore accounts. Inspired by the US system, the plan targets big businesses, rich individuals, and avoidance schemes. To make this work, HMRC will need to improve its famously slow phone lines and beef up its investigative teams. Though £1.5 billion has already been pledged to hire thousands of new compliance officers, so maybe they'll get there. So keep your ears open when people start boasting about how little tax they pay, as paying attention might become very beneficial to you soon. HMRC's latest self-assessment stats reveal a digital dilemma. While more people are trying out third-party tax software, most individuals are still clinging to HMRC's own portal like it's a security blanket, which could spell trouble when making tax digital kicks in. From 2026, around 1.6 million taxpayers will have to switch to third-party tools, but old habits die hard. Accountants are bracing for a busy year as many taxpayers aren't yet using digital tools for record keeping. Spoiler, that's kind of the whole point of MTD. The message is clear. One size won't fit all, and the push to go digital is going to need more than just a deadline. It needs a mindset shift. So if you submit annual tax returns and aren't using third-party software to track your income throughout the year, now's the time to start. Getting familiar with it this year will save you from unexpected headaches and delays when next April rolls around. John Lewis is celebrating a 73% jump in profits, hitting £97 million, but have announced that for the third year in a row, staff will not receive a bonus. Instead of handing out cash, they're focusing on business growth and pay rises for employees. While workers will get a 7.4% pay bump, the company's also dealing with rising costs like a £40 million hit from national insurance hikes. This marks the fourth time in 5 years that no bonus has been paid, with the first freeze occurring in 2020 due to the impact of COVID lockdowns. The situation at John Lewis is a pretty good snapshot of what's going on with a lot of businesses in the UK right now. Profits may be up, but rising costs like national insurance hikes are squeezing companies, leading to tough decisions like skipping bonuses. And that's a wrap for today's episode of Tax Tidbits. I hope you have found some value in this week's update. Thanks for watching, and I'll see you next time.